gonna drop down to a weekly chart right now, and we can see that we have another gap right down below here. We have this gap here on the weekly right here. So it looks like we really want to fill in this gap here. We have this open gap, and just looking at the way it's just reacting off these levels, looks like we really want to fill in this gap right here. So that's my higher time frame objective. You can see right here. So when we're doing higher time frame analysis like this, monthly, weekly, you're looking at price the same exact way, the same way you look at it on the 4-hour, 1 hour, 15 minute. You're looking at it the same way on the weekly, the monthly, it doesn't matter, right? So we can see on the weekly, we're reaching for this objective, and just looking at the daily chart.
Ideally, I do want dollar to drop a little bit more. I want it to go for, I want to say this low next as a next target, right? Depending on how we react on this volume bounce right here and here on the daily, I want to see if we can go all the way down for that low.
What's going on, guys? Bill Catches Pips here. Today's date is December 17th, 2020. Just want to announce that this is going to be my final market review for the year. It was pretty fun doing these reviews. We caught lots of amazing moves in the past few months, but I feel like positioning yourself now in the markets is pretty much too late. I'm still going to be active in the chat. I'll still send markups, stuff in hindsight. I'm just not going to be doing the market reviews or the live trading till 2021. And in this video, I'm just going to review everything that happened so far with the dollar index. So I'm going to drop down to the daily chart. I'm going to put a vertical line in January 1st, 2020. Okay, so you can see January 1st right here. We can see initially we just accumulated, had a fluff in the market to the upside right here. Right, took out the equal highs right here, right, took out this high, then started to really drop, taking out the retail trend line right here. So first 2 months or so, we can see we just accumulated up, then had that really hard drop in the market, taking out the liquidity. Right, you can see equal lows right here, a huge liquidity pool right here. We can see all that got purged out. Right, and also came inside of a gap right here. Right, you can see this daily gap right here. So let's just look at the dates here, and let's just look at what happened here. Right, so right here on March 9th, you can see that it took out these equal lows right here, took out this liquidity pool, and came in 50% of this gap right here, and then started to surge up right on March 9th. So I'm going to go on this website called American Journal of Managed Care and pull up a timeline of COVID-19 developments. So right here we can see on March 11th, the WHO declares COVID-19 a pandemic. Right, look what happened 2 days before that. 2 days before that, it just came inside the gap, took out the liquidity, and started to surge up. Right? Then we can see March 13th, this is when the travel ban was set and Trump declared COVID-19 a national emergency. Okay, so I'm just going to drop down to the 1 hour chart, see if I can go back there. Right, so you can see March 11th was right here. This is when it was said to be a national emergency. Right on this candle right here, we can see how the market just created a gap right here. Created this gap, respected this gap here at 9 o'clock. Then we can see stock market open, it just started to rally from this point on. Then from there, it just really had that huge spike to the upside right here. Right? It was a bullish market from this point on. Right? So the entire time dollar was going up here, US 30 was just really dropping. Right? The stock market was just dropping at that point.
So I'm gonna go back over to the daily chart. Go back to where we were. Okay, so March 11th was right here when WHO said it was a pandemic. And you can see that huge spike up till March 20th. Right? It was a 9-day rally to the upside, taking out all the liquidity on the buy side. Then we can see the market really breaking down with volume imbalances and gaps, making its way to the downside. Right? You see a volume imbalance here, left it open as a breakaway, and then created this gap here. You can see right here we just had a retracement back inside the gap, but look how long this gap was held. So it started here, and then we can see that 60-day period, it just did a final retracement inside this gap right here, this new gap that it just created on May 18. Created this gap, did a final retracement here, and then completely broke lower from that point on. Right? So what do we know about these ranges of how long these gaps can be held? It can be as long as 20, 40, and 60 days. We can see right here at this 60-day period, which it ended right here, we can see how it just had that final retracement, then that huge drop to the downside. Right? So it came inside of this gap and also the low end of this bigger gap right here, and then dropped. Right? On its way down, this is the only volume imbalance right here that it created. Right? Volume imbalances are very strong. You can see the skip in price, you don't want to include the wicks. So from here to here, you can see that volume imbalance. And you can see how the market retraced inside of this volume imbalance and then continued to break lower for this low. Right? Then it came for this low and then really started to drop. Right, so check this out. The volume imbalance started here. Then we can see 20 days to the future. You can see 20 days later, it just respected this level and offered a trade right here. Right? These 2 down days right here, this itself offered a trade. Right? Then we can see that next push up inside the volume imbalance again as a re-entry and then start to drop. So I'm going to look at the key areas where the market reversed, and I'm just going to compare it to the COVID-19 timeline. So right here, this is a key level where it just completely dropped from, right inside this gap and the low end of this daily gap right here. I'm talking about this gap here, low of this candle, high of this, skip in price, one side of the market was offered, and this bigger gap right here. And you can see right here on May 25th, just came here one last time and then completely dropped from this point on, and also being that 60-day period as well, right, from where the gap started. 60 days later we can see how it just completely dropped. Right, May 25th. I'm gonna pull up the timeline on COVID. Let's see, May 25th. Right, so the closest thing we have to May 25th would be May 21 here and 28th. And this one right here is pretty interesting, right? US COVID-19 deaths passed the 100K mark. So you gotta think, this is May 25th is when it dropped, right? Was when dollar dropped right here. Then we can see on May 28th, this was released to the public. But these people, they already knew this information before May 28th. They just released it to the public on this day. Okay, look what dollar did. Look what dollar did here. Came inside this 50% of the gap, then started to drop. 3 days before that news release, you can see how we can catch this and position ourselves before that news. Okay. You can see it just kept dropping for the next 15 days, 16 days, and then we traced up inside of this volume imbalance right here. Look how long this volume imbalance here was open till it came to it, retraced, and then dropped. Check it out, 20 days. What do you know about these gaps and volume imbalances holding for? Maximum of 20, 40, and 60 days. And you can see how on that 20-day period, it came to it. That's when you can expect something. In that 20-day period, you can just see that drop. And this itself, these two candles, it offered a trade. Because we're looking at the daily chart, right?
Right, going on a smaller time frame like 15-minute chart, 1 hour chart, these 2 days offered a trade, offered a sell-off on the dollar, while foreign currencies rallied up when this happened. Then you can see that re-entry right here and that drop again. Right, so let's compare the dates again. We can see this happened June 18, June 19, and June 22. So around this time, right, around June 18 till June 22. We're gonna pull up the COVID-19 timeline and just compare. You can see June 18. You can see WHO and study into hydroxychloroquine, pretty big news. Then NIH halts trial of hydroxychloroquine, another bad news. And you can see June 22, that's when what happened. That's when we saw that drop right here inside this volume imbalance. What happened here, June 22, studies suggest 80% of cases in March went undetected. Very bad news here. And look at that drop. Look at that drop in dollar from that point on. Dropped here, retraced right here from June 25th all the way till July 1st. It just kind of held this volume imbalance right here and then dropped. Let's compare the dates again. June 25th. So you can see these news releases here. Rising cases in the south. You can see this news right here. Then you can see Fauci warns new COVID-19 cases could hit 100K in a day, which is very bad. Right, very bad news right here. And also, this did end up being true. This right here did end up being true, because let's look at this website called Worldometer. You can see all the cases here per day. Right, COVID coronavirus updates right here. You can see USA here. This was now. Look at yesterday. Yesterday, look how many cases a day. In a day, 248,000. And this is what Fauci said back in June 30th. Look what he said here. Right, he was pretty accurate. He was pretty accurate in this. And you can see at that point right here, June 30th, it did a final tap inside this volume imbalance and then completely tanked from this point on. And you can see it drop, going for this daily low right here, and then really dropping, going for a higher time frame target on weekly. Right, on weekly, it was just seeking this gap right here, just trying to fill in this gap. Right, so I'm going to drop back down to the daily, and you can see it dropping here, creating gaps right here, creating gaps in the market, and then tanking down. Right, so if you're leaving everything marked on your charts, you would still probably have this gap right here marked right here. You can see how it just taps right into it right here. Look how it taps inside of this gap right here. So it's mitigating out of this position that it bought off from here, right? It bought off here. Look how price is coming back up, mitigating out of this position. And also look at this other gap that it taps into right here. Look at the confluence here. Right, lining up two gaps right here. Make this a little bit darker, a darker yellow here. You can see, look where the bodies of the candle stopped. Bodies of the candle stopped right here and then started to drop. Right, so look at the date again, September 25th. Let's pull up the timeline. That's September. Let's go to September. Had a lot of news here. This just accelerated the dollar going lower and lower. You know, I'm just looking at these key times. You know, these key times. Look at this. September 25th, Midwest states see increase in COVID-19 cases. That's September 28th. You can see some huge news here. Global COVID-19 deaths surpass 1 million. September 28th. Look what happened here, September 28th. Look at these key times where the market is reversing. You know, it's usually a few days before a news release or at a news release, you know. Right here you can see September 28th, we had that drop. And right here, This is where elections was, right? November 3rd was elections. And see, November 3rd, we just had that drop on dollar right here, that instant drop. Right? But look where it tapped into, right? Day before elections, we can see that there was a volume bounce right here from September 28th. You know, September 28th was a huge news day right here. It's September 28th. Keep in mind, we had this news release date here. Global COVID-19 deaths surpassed 1 million. That's when the market just gapped down with the volume imbalance right here, just skipped in price and started to really drop. Right, so this right here is a key level, and we can see right here, day before elections, tapped right into it, dropped. Then the day after elections, tapped in the volume imbalance again, then never came back to this level. It started to really drop from this point on, taking out this low, then really trying to fill in that weekly gap right down here. Right, that's what the market was really trying to reach for. After going here, it was aiming for this level. So for a good swing trade, this right here was it. Holding this till the end of the year. This was it. This was the trade right here. You can see that it never came back to it. Created a gap right here. You can see this gap being created here. So you can position yourself in this right here and just go for that weekly target right there. See how I just filled it in right here. You can see how it came back up inside of this gap and then dropped. So again, let's pull up the timeline again. Right here, we know what happened election day. And right here, we can see it filled in the gap and really dropped again. Pull up the timeline. That was when November 11, right? When it tapped into it. Came inside of this volume imbalance. Right here. Came in this volume imbalance. And the gap. Then we had that drop on November 11th. Going down to November 11. Let's see right here. Had some bad news. Indoor venues responsible for much of COVID-19 spread, which is pretty big because that means businesses need to shut down if this is happening. Okay, you can see right here we just had that drop. Then we had this volume imbalance right here being respected. You can see the bodies of the candles respected this level, dropped, and then from that point on, all it did was try to fill in this weekly gap, and I still have it going a little bit lower with this liquidity pool. So this concludes this year's trading. It's been a great trading year, and even in these market conditions, the market still respected these key levels, offering so many opportunities. I'll be back 2021 with live trading and market reviews. If you'd like to join my team, just join both the Telegram links in the description. It's a free chat. One is a channel, the other is a discussion chat, so join both of them. And yeah, that's it. Peace out, guys. Enjoy the rest of the year. Merry Christmas and Happy New Year's.